There's a massive, high-stakes battle being fought right now, not on some physical battlefield, but deep inside the digital plumbing of global finance. It's a race, and the prize is controlling the very rails that all our money moves on.
And this quote just says it all, doesn't it? We're not just talking about creating another cool app. This is about owning the fundamental roads and highways of the future economy. The dream is to become the infrastructure that everyone else has to pay to use.
So here's our game plan. We'll kick things off with the race itself. Then we'll look at the three main strategies these companies are using: buy, build, and partner. And finally, we'll wrap up with what this re-architected future is really all about.
All right, let's get into it. Well, most of us are just, tapping our cards or phones without a second thought. There is a monumental effort happening behind the scenes to completely rebuild the plumbing that makes it all work. So what exactly are payment rails? Well, think of them like train tracks, but for money. They're the essential networks, the Visas, the Mastercards of the world, that let cash travel from your account to, say, a coffee shop. The real fight today is over who gets to build the next generation of those tracks. And right at the heart of this high-stakes game are three major players, each one with a totally different playbook. You've got Coinbase, the crypto exchange giant that's looking for its next big thing. You've got Block, the powerhouse behind Square and Cash App. And then there's Circle, the company that created the USDC stablecoin.
This metaphor is just perfect because it really gets at the tension here. Nobody wants to just be one part of the process. No, they want to control the entire journey from start to finish. It's not about running one leg of the race, it's about owning the whole darn track.
So let's dig into the first strategy. And it's a classic: if you can't build it fast enough, just buy it. This is the path that both the crypto-native Coinbase and the old guard giant Mastercard seem to be on.
And apparently, they both have their eyes on the same prize, a London startup called BVNK. Now, BVNK is a specialist in using stablecoins for business payments, and its global network in over 100 countries makes it this incredibly valuable plug-and-play piece of infrastructure, a real game changer. Okay, and this is where it gets really fascinating. Their motivations are completely different. For Coinbase, buying a company like BVNK is about evolution. It's a way to move away from the wild swings of crypto trading fees and into the steady, predictable world of being a core payment utility. But for Mastercard, it's pure survival. It's an if you can't beat 'em, buy 'em move. They know payments are moving to the blockchain, and they need a seat at that table, or risk getting left behind. And this really gets to the heart of it. This whole battle isn't about crypto hype or speculation anymore. Stablecoins, these digital dollars, are becoming the actual foundational layer. They are the new plumbing for global finance.
All right, on to a totally different strategy. Instead of buying up the old roads, why not just build a brand new highway from scratch? Well, that's exactly what Block is betting on. Block, which is run by Jack Dorsey, is making a seriously bold play. They are rolling out a Bitcoin checkout option for merchants, and their stated goal is to create a payment system that completely cuts out the traditional card networks and all those fees they charge. And you can see the radical difference right here. The old way shoves every single transaction through a middleman, the card network, which of course takes a slice. Block's vision creates a direct line, a straight shot from the buyer to the seller. For merchants, that could mean saving billions. And this analogy just nails it, right? It perfectly captures that disruptive spirit. Just like Twitter made communication more direct, Dorsey is now trying to do the same for payments by just deleting the middleman. It's a pretty powerful idea. Okay, so we've covered buy and build. That brings us to our third and final strategy, partner. The idea here is, instead of trying to fight the old system or totally replace it, you work with it, you integrate, and you bring new tech into the mainstream. This is Circle's playbook. So Circle has made an absolutely massive move. They've inked a deal with Deutsche Börse. We're talking one of the biggest, most established financial institutions in all of Europe. This is the definition of old financial power shaking hands with new financial tech. So what does a partnership like this actually look like in the real world? We are talking about trades on a massive institutional scale. I mean, just picture a single transaction worth €1 billion. And now, imagine that billion-euro trade settling almost instantly using stablecoins on a blockchain. Compare that to the old way, where it could take days to clear through clunky banking systems. I mean, this is a seismic shift. And the fallout from this is just huge. First off, it gives Circle and its USDC stablecoin an incredible amount of credibility. Second, it's a huge win for Europe's new crypto rules, known as MiCA, because it shows this regulation is actually creating a clear legal path for this stuff to work. And maybe most importantly, it transforms stablecoins from being seen as some niche crypto toy into a serious heavy-duty tool for global capital markets. So, after all that, where does this leave us? We've seen 3 very different companies with 3 very different strategies, all gunning for the exact same prize. Let's pull it all together and see the big picture. So here's the scoreboard. You've got the buy strategy from Coinbase and Mastercard, who are trying to acquire the critical infrastructure. You've got the build strategy from Block, which is trying to create a whole new system from the ground up. And you've got the partner strategy from Circle, which is integrating with the old guard to gain legitimacy.
And that brings us to the main takeaway. What we're watching isn't just a simple shift to digital cash. No, we are witnessing the fundamental architecture of finance being taken apart and completely rebuilt, piece by piece, with new technologies like stablecoins right at the very foundation. And that leaves us with one final big question. Because this isn't just some abstract corporate fight. The actual roads that your money will travel on in the future are being designed and paved as we speak. So the real question is, who are you going to trust to build them?